This is the pre-market session of Monday, the 7th of July 2025. CRCL is down 0.94%. We had projections that went all the way towards $257.05. The stock obviously tested those highs, printed 288.14 or even slightly higher. But since that time, the stock has given up all those gains and is consolidating between 198 and $175. The short-term trend is now bearish, and in terms of Fibonacci projections, see them here. They go as high as 486.37, 440.42, 366.03, but also look at this very, very, very deep downward projection. Obviously, stocks don't trade in negatives, but it just gives you an idea of what that means. And above that, 19.2 to $68. These are just Fibonacci projections. The machine learning tool is extrapolating and projecting based on the data available to it that it has potential to attempt to reach the highs of 486.37. There's absolutely no guarantee that that will be the case. But in terms of the fundamentals concerning CRCL and Treasuries, I've been able to prompt ChatGPT to give us some literature that we can listen to.
Certainly. Here's a deeper, more cohesive analysis of the macro themes of treasuries, stablecoins, debt utility, and U.S. interest payment cycles, clearly tied into the investment narrative around CRCL, Circle Future Corp, associated with USD Coin USDC. Treasuries and stablecoins, a century-long cycle of trust and evolution. Why CRCL matters now. 1. Treasuries are anticipated to experience significant demand for over a century. Treasuries have been the backbone of global financial trust, acting as the benchmark for safety and liquidity. In times of uncertainty or tightening monetary conditions, institutional investors and increasingly on-chain stablecoin reserves pile into treasuries. CRCL is directly tied to this demand. Circle's USDC stablecoin is backed by short-term US treasuries and cash equivalents. As treasuries regain favor amid volatile global markets and higher for longer interest rates, the assets backing USDC become more profitable. This enhances Circle's revenue through yield on reserves, boosting its potential valuation and making CRCL stock an attractive proxy for investors seeking exposure to safe yield within a digital asset wrapper. 2. Stablecoins are poised for widespread adoption. Enter the digital dollar index. Stablecoins like USDC are not just payment tools, they are becoming modern infrastructure for capital efficiency. As discussions around a digital dollar index gain traction, a framework to track or represent USD denominated digital instruments, USDC could be a leading candidate for integration, given its compliance first positioning. CRCL's role in enabling a transparent, treasury backed stablecoin positions it as a foundational pillar in this new index framework. The network effects of this transformation would give Circle a durable moat, and CRCL stock could reflect the transition of USDC into a systemic digital dollar instrument. 3. Debt is becoming a utility, not just a burden. Public narratives often treat US debt as purely negative, but in practice, US treasuries are a form of monetary utility, instruments that lubricate the global financial system, and now, increasingly, Web3 finance. Stablecoins backed by treasuries create programmable, composable forms of public debt. USDC isn't just a token, it's a 24/7 settlement layer for digitized US sovereign debt. This reframing of debt as a yield-generating digital native asset allows Circle, and by extension CRCL, to monetize the utility of debt, aligning with macro trends around financial digitization. Understanding US interest payments and how they flow through CRCL's ecosystem. 1. About 70% of US security interest payments stay domestic. There's a misconception that US debt interest payments are drained abroad. In reality, around 70% of interest on treasuries is recycled back into the US economy. via pensions, banks, insurance firms, and now stablecoin reserve custodians. Circle's reserve assets benefit directly from these interest flows. The yield on the treasuries backing USDC is returned to Circle and partially used to cover operating costs, with the remainder contributing to profits. As USDC scales, the interest margin on its reserves becomes a key revenue driver. In a high rate environment, this further supports CRCL's financial strength and valuation. These payments cascade through the financial system. Whether it's JP Morgan, BlackRock, or Circle, the interest on treasuries flows back into domestic ecosystems, financing dividends, buybacks, and innovation. With Circle now expected to go public via CRCL, investors are looking at a fintech company that turns government debt into digital rails for global finance. The more interest paid, the stronger the income stream backing USDC becomes. This revenue engine is not speculative. It's tied to one of the most stable, legally structured forms of income in finance: US sovereign interest. Final thoughts. Why CRCL stock may be a digital proxy for US Treasury utility. In a world where treasuries are in high demand, stablecoins are gaining regulatory clarity and institutional backing, and US debt is being reframed as a utility, CRCL represents a new type of financial instrument, a publicly traded entity that captures the intersection of macroeconomic yield, blockchain efficiency, and USD denominated stability. Much like how MicroStrategy became a public proxy for Bitcoin, CRCL could become the proxy for the tokenized US Treasury market, a bet not just on crypto, but on the digitization of the dollar itself.
Okay, so we're still maintaining our projections towards 257.05, but right now things have cooled off. And it's still holding the loss of okay, it's giving up some of those losses, so see what you make of CRCL, and if something comes up again, I will definitely jump on it concerning the stock. Okay, thank you very much for watching this video.